This is Sujeet Indap with the Lex column in New York. Today we're going to talk about the epic rivalry in emerging markets, China versus India, and who better to discuss that with me than Lucy Colback, our Lex correspondent in Asia, in Hong Kong. Lucy, welcome to New York. Hopefully you've had a good visit.
Thank you.
Tell us what the state of play is right now in China versus India.
Well, China has rallied a lot, so it would be understandable if investors thought it was looking expensive at the moment. But if you look at the MSCI indices, which are what most institutional investors use, China's actually looking a little bit cheaper than India still. If you look out 2 years, China is trading on 10 times earnings and India is trading on 12 times. India's got a little bit more growth, mid-teens, and China's low teens, but it's really not that extended. And Citi Research points out that one of the reasons for that is that earnings since 2008, peak levels, are actually up 58% in China, whereas in India, earnings since then are only up 6%.
And so in terms of market sentiment right now, how has that changed in the last few months? I know there's been a little bit of a shift, perhaps.
In terms of weightings?
Yeah.
Well, you again would think that investors had been falling all over themselves to get into China, but not really. If you look at fund flow data, particularly retail investors have been selling down country funds specifically. So country funds actually have less money in China now than they did in 2012, whereas China have more money than they did then. And if you look at sort of institutional funds in GEM weightings, for instance, global emerging markets, the overweight in India is massive versus history, and in China they're really just around neutral, so they're not really there. And
so what's behind this kind of mismatch, I guess, in investor sentiment?
If you look at volatility and fear, basically, China's domestic market's gone up a lot, and the economy obviously in India looks better than China does right now in terms of growth rates. But an awful lot of that has sort of been played out in terms of pricing, as I mentioned. And if you look at volatility, there's still a lot of fear about China. Volatility indices, which measure, for instance, how much people are prepared to pay for options to insure themselves against big moves in either direction in the market, it's spiked hugely, which suggests that there is still a lot of fear out there, and therefore there could potentially be more room for China to run because institutions are still reluctant to get involved. They're still fearful.
Well, very good, Lucy. We'll keep watching. Obviously, it's always changing very quickly in China versus India. It sounds like China's a place to be, even if investors are not there yet. We'll be watching. Thank you.